How to beat the market by focusing on a niche market we call mobile app investing. In this 3 minutes video we lay out our 5 steps approach so you too can benefit from it. First thing you need to know, Google and Apple, who own the 2 largest mobile app marketplaces, are providing a real-time chart of the top downloaded as well as the top grossing app per country. What is top grossing? It's a ranking based on in-app purchases, which corresponds to real money spent by users in the app, such as subscriptions or buying items, boosters, etc. This is a gold mine. If you can crunch the data at all times, you will detect trends in mobile apps and can be the first to invest in them, beating the market and slower players to it. So how is this done? Step 1. You want to monitor those app stores' rankings in the largest economies of the world. Indeed, an app ranked in the top in the US or in Japan is generating a lot more revenue than in Nicaragua or other smaller countries. At App Investor, we crunch the top Apple and Android charts of the 50 biggest countries on a daily basis, which gives us plenty of good data to work with. Step 2. You'll want to estimate the revenue for each of the apps, based on their rankings in all the countries you are monitoring. It doesn't have to be precise, the key is consistency. If an app is usually around the top 100 and is suddenly trending to the top 10, it will make a lot more money. Once you are able to estimate the revenue of each app, it's easy to roll that up to the publishers themselves, so you know how much they're making in mobile revenue. Step 3. Now that you know how much they're making, you'll want to detect and shift in their revenue. Given the sheer amount of data, we'd recommend using anomaly detection techniques using AI algorithms, but there's many ways to skin that cat. We like anomaly detection because it's similar to how banks detect fraud, but instead you use it to detect an abnormal pattern in mobile developers' revenue. Step 4 is research. Not every publisher is a public company, but many are. Over time, we have identified over 300 public companies active in the mobile app economy, and we are researching and keeping up to date with their subsidiaries and affiliations. With all those tools in place, once an app is trending and its publisher is a public company that is suddenly generating more revenue, it gets our attention and moves to the next layer. Now, you will want to look at that company's financials to understand how that sudden increase in revenue will impact their bottom line. Things like how big is the company, what's their trailing 12 months revenue, do they have a healthy balance sheet? For example, if the publisher is a subsidiary of a large player like Microsoft, Tencent, or Disney, even a new top number 1 app is not going to move the needle that much. But if it's a smaller company, a new successful game might have a huge impact and signal a buy opportunity. Once you've weighed all of that, then you are ready to decide, should I invest? You'll obviously have to keep monitoring this company's app ranks and ensure this was not a short-lived fad. Does it seem complicated? Well, we have been doing it for years and built the tools to automate most of it. And the best part is, we share all our research for free and update our followers on new trends and buying opportunities. Follow us on your favorite social media to get notified when we send an alert or update our research.